Hello, everyone, and welcome to Top Tips for Optimizing Property Tax Compliance. My name is Mimi, and I'll be your host for today's webinar. Today, we'll be covering the economic landscape surrounding property tax compliance, the cost of real and personal property tax, dealing with penalties and appeals, and our top tips for managing property tax compliance. Before we dive in, just a couple of housekeeping items. Friendly reminder that Avalara cannot provide legal tax advice, but we will answer your questions as best we can. On your screen is our safe harbor policy. Please take a moment to review it while I continue with some additional housekeeping. We are recording today's event, so if you want to listen to it again or share it with a colleague, you'll receive the recording within the next 24 hours. The console you're looking at can be customized, so feel free to move or resize the windows. Slides can be resized by dragging the bottom corner or by downloading the PDF slide deck under Additional Resources. The Additional Resources section contains related resources. If there are any you'd like to go check out, go ahead and click on them now, as the console will be automatically closed at the end of the webinar. If you have any questions, please submit them using the Ask a Question box. We will answer as many questions as possible throughout the webcast and during our Q&A time at the end of the presentation. You may also submit webinar troubleshooting questions there. Join the group chat by clicking the button down at the bottom of your screen with the little chat bubbles. The group chat will pop up on your screen. We encourage you all to introduce yourself and make connections with your fellow Avalara customers and prospects. Drop in the chat where you're calling in from. If you have any technical issues, there's a question mark icon at the box, or reach out using the Ask a Question box. Now, please note we are offering 1 CPE credit for today's presentation. For those looking to receive CPE credit today, please note that we will be asking you to respond to 3 of our 4 poll questions. The poll question will pop up on your screen for a limited amount of time, so please make sure you are ready to answer when the question appears. Please do not split the tile screens on your computer, as this can affect the placement of the poll question. You must also attend the full 60-minute duration of the webinar. Once you have met the CPE requirements, your certificate will be available to download in the Earn Certification box on your screen. Click the icon to access. It will open up in a new tab, and your certificate will also be sent to you in a post-event email if you miss it post-event. Unfortunately, we are unable to provide CPE credit to those who have technology issues that prevent them from qualifying. And now, for the fun stuff, let's meet today's presenter. Melissa is a senior sales executive here at Avalara. Melissa, do you want to take a second to introduce yourself?
Hi, you guys. I'm Melissa Shad. I am joining Avalara this year in the sales role for Avalara Property Tax. I have about 19 years of property tax experience in various technology companies and doing managed services. Probably have worked with some of you over the years. So it's great to be here to be able to talk to you guys today about property tax, both the technology side, the hands-on side, and certainly, the taxpayer side.
Awesome. We're thrilled to have you here today, Melissa. So before we get into anything else, we have our first poll question for today. The question is, how would you rate your current property tax compliance processes? The options are great, good, average, poor, or terrible. I'll give you a moment to give an answer. Okay. One more second. All right. Here are responses. Mostly good and average, which is probably what we want for this, but we'll learn even more today in this webinar about how to keep them good and average and maybe even great. All right, I'm going to throw it over to you, Melissa.
All right. So our agenda today is going to be talking about the economic landscape as we've discussed. The property tax challenges that are inherent with what we have today, the digital transformation and property tax compliance pieces, a couple of use cases for you guys to just chew on a little bit. And then we have some top tips, some ideas for how to help with this process. We'll chat for a little bit about Avalara property tax in relation to some of the things that we're talking about. Don't worry, it's not going to be a sales pitch. It's just letting you kind of what's out there technologically. And then we'll definitely want to do some Q&A. So talking about the economic landscape, let's go ahead and move to that slide. The economic landscape is one of the pieces that I think sometimes is challenging for people to remember because, as we're all hands-on, day-to-day, hitting deadlines, and not only having property tax to do, but I know many of you are tasked with a lot of different things in your organization. So property tax can be the forefront of what you do. It also could be, not as much the forefront of what you do. So we want to make sure that you're aware of, kind of what the real costs of the issues inherent to property tax are. So, we all want to pretend that COVID didn't happen. We want to move on from it. But the post-COVID backdrop here is that there's different concerns. Many of us are working from home or working from a hybrid situation, which has made mail challenging because property tax is still, primarily paper-based. Also for real estate, people went away from their offices, never came back. Valuations of real estate, obviously, are really challenging. We don't want to pay for buildings that we're not in. Assessors still want the tax revenue from it. So COVID really, did put a huge wrinkle in some of the property tax processes and some of the economics surrounding that valuation piece. Staffing. Lots of workers went away and never came back. So I know many of you guys are having a really hard time finding people. Also, when we look at, people coming out of college in the accounting programs, not very many programs talk about property tax, even if you're in tax accounting. And so you're not getting people that are completely experienced in property tax necessarily coming right out of college. So there's been a lot of turnover, a lot of people circling around different firms, and a lot of people leaving the industry or retiring out of it. And there's nobody to backfill them. And a lot of that expertise is being lost. So that's super challenging. As I touched on, paper-based compliance, many jurisdictions are completely paper-based, almost all of them. Some have their own little websites, some allow you to do different things online, but they're all very one by one and one off. There's not really a good, state process in almost any state. Property tax is a high cost for many businesses. When you look at all of the tax that actually gets paid out, especially for those who own real estate, it can be a significant amount of budget. And it's something that, not everybody really pays that much attention to. And it does impact your EBITDA, which is, sometimes what people get bonused on. So it's something, really important to think about how those financials and how those tax values and payments come into play in terms of your bottom line, which we'll talk about a little bit later. And so without optimization, a lot of businesses are just like, what? I'm going to just pay the bills as they come in. I'm going to send in a return, just get it in on time. Doesn't matter what the value is, doesn't matter if it's right. And I'm going to accept whatever value comes back. And so that can cost businesses, hundreds, thousands, hundreds of thousands of dollars, sometimes in tax overpayments and penalties. So when we talk a little bit too about the amount of time you guys spend on property tax, that's another cost that nobody really wants to think about. But all of our resource costs are, part of our budget, part of our bottom line. And when we're thinking about somebody spending 80% of their time on property tax, when maybe with automation that could be 50 or 40, that's definitely a way of reducing cost, even if it doesn't look like bottom line cost. But when you think about people spending about 30 hours a month managing activities with returns and filings, assessments, budgeting, there's a lot of different ways that that time gets spent. And a lot of it is tracking. Did everything come in? Did we pay everything on time? When are things due? Did we get appeals? Where do we put all these pieces of paper if we don't have, a good paperless system in place? The assessments, did we get them? Are they right? How do we even check that? And so lots and lots of different things that make up all of the pieces of the property tax filing landscape. And some of us were better at, and some things we're not as good at, depending on the organization, depending on your, business practices. So lots of room for improvement with a lot of that kind of tracking and time savings for sure. So property tax challenge, lots of challenges. That's a good word for it, right? Starting out with cost of real and personal property. So just, basic bottom line, real property, and that involvement is usually land, usually buildings, could be golf courses, parking lots, any sort of physical land property. Buildings are going to be anything that are built on it. And a lot of times the value may be different. So you might get assessments with land values and building values separately. You might be fine with the land value and not with the building value. So being able to break that out and identify whether that valuation is fair and in line with what it should be for both the land and the building for the real property. And then personal property being those movable assets, those things that can be picked up and moved to another office if you are switching locations or something like that. And usually there's a lot more of the personal property assets, which make them harder to track sometimes, and also harder to depreciate appropriately and report appropriately. Identifying what they really are, and for each one of the return forms, what schedule it should go on, how aggressively you can depreciate it to reduce that value. Those are all, things that should be really looked at, because as you reduce that value of the property, certainly you're reducing your property tax cost. So this is my least favorite slide because I'm not a math person. I'm a people person, but you guys are math people, right? And so when we look at the financials, some of the things that you need to think about is that in some jurisdictions, supplies and inventory are taxable, in some they're not. In some jurisdictions, you can pull out other costs, or you have to add in other costs like sales tax. Software, not taxable in like California, where I am, because we're a very computer friendly state. Lots of other things taxable here that aren't taxable in other states. Vehicles, when you move them from state to state, they could be taxable or not taxable. So lots of planning going into place with that. We've had definitely customers who've talked about how, when tax departments get some of these real estate notices or real estate purchases from their real estate department or from somewhere else in the company, and they're like, oh my gosh, why would we put an inventory warehouse in one of the only 2 or 3 states that tax inventory? Because they didn't know and they didn't ask you guys. So again, sometimes businesses make these missteps that cost them a lot of money, simply because they're just not as aware as they should be of how this impacts. So property tax is part of the cost of doing business. Those are, the above the line costs. And again, it does impact your EBITDA. And if that's something that you get bonused on, or that, anybody in your company gets bonused on, I certainly have known organizations where each one of their warehouses, their warehouse managers and leaders got bonused on, forecasting accurately and not overpaying tax. Well, it's hard to forecast accurately when you don't have all the information. So they were very tight with their tax department to make sure everybody had the right information, because it really did impact them and it motivated them to make sure that they weren't, hiding assets, that they were making sure that disposals were reported, things like that. So thinking about the size of your property tax being relative to your net income as an organization or your client's organization, and looking at what bringing tax liability down can do to their cash flows. Also, when you think about using technology, SaaS solutions often won't even show up as an asset. They're typically not going to be, sometimes they're, capital expenses, sometimes they're not going to be, as part of your larger budget. So it depends on the company and kind of what their process is, but it's something to consider as far as how that investment is going to trim some of these other costs, and then where that's going to show up for an organization. Assessors also, when you look at the forms, sometimes just have cost on the form, cost of the assets. That's great, but if you don't yourself know what the fair market value is, or your opinion of value is of those assets, then you don't know when you get an assessment notice if what you think that you should be paying or you think you should be valued at for that personal property is in line. Because a lot of people are just like, oh, the form only wants cost. I'll just add up my costs and put them on the form. But then when the assessment comes back, it could be way overvalued because they didn't take off assets, because they're not depreciating as aggressively as they could be for certain types of assets. So again, that's where you have to know that information. It also could be not taking advantage of exemptions or abatements that are available, not just getting down to the nitty gritty of what should be pulled out in the first place and not reported as taxable on a certain jurisdiction's form. So property tax is different also in terms of financials in that it's a tax on your assets rather than on a portion of your revenue. Like sales tax is a little bit of a different animal and it's much more straightforward, certainly. So if you look at your financial statements or your client's financial statements, that's where you'll see how the property tax is affecting the bottom line. So over 50% of organizations find tax calculations to be challenging and very challenging. And if I had to guess, I would guess that the other ones that don't either have a system in place that does that for them or they're not doing them. And I certainly have a lot of organizations that I work with that currently aren't doing those calculations. They're just reporting the cost. They have no interest in trying to go out and find all the depreciation tables and depreciate their property accurately or look at, any sort of comparisons of year over year, do any sort of thresholding of my opinion of value versus the assessor's noticed value. Is it in line? Is it within a reasonable range? So those people that don't seem to find it as challenging, I think most of the reason they don't is just because they're probably not really spending a whole lot of time on it. And there are a lot of organizations like that, which is where, CPA firms and any type of firms consulting can really make a difference in these companies' bottom lines, trimming down those tax payments and really showing your value too. So those are all some things to think about. But the challenges inherent in property tax are valuation factors. Where do you have to, look at replacement cost new? What are the depreciation factors that are appropriate for certain types of property? A lot of jurisdictions have assessor specific tables. Each assessor wants you to use their own table. Whether you do or not is certainly up to you. But how you value that property yourself and then how you can argue that case if you need to with the assessor is something that you'd want to know. And you can't do it without any information whatsoever. Those tables change also. So last year they might have factors that are different than this year. And so when you're calculating, the tax or the opinion of value, it's going to be different. And so if you're not keeping up with those things, you're not going to be in line with, what you can do to begin with. Tax rates. How do you know what the right rate is? How do you even know what the rate is from last year that you can use for a projection? And then as those new rates are published or as those new bills are coming in, making sure that it's again in line with what the notice value was and the value that you reported. Alternative accounting and investment decisions you can make kind of touched on that a little bit, but again, pulling out anything that's not taxable, making sure you're not over reporting anything. There's lots of things in people's fixed asset ledgers that I've seen on, firms asset listings when we've been loading stuff into a property tax system. They could have marketing costs in there. They could have, installation of computers. They could have all kinds of things in there as part of those costs. And if those things aren't really reviewed and pulled out as not being taxable, that can really jack up even the cost that is being reported, let alone the value. So, it's definitely worth taking a review of those assets and just, again, being able to use tools to see that. I know that there's lots of companies using things like Alteryx or Power BI to identify workflows of pulling out things based on, certain keywords and descriptions. And, there's lots of ways to do some of that more automatically. That is spending less resource time. Nobody's asking you to go line by line in an Excel spreadsheet and read every description, but there are certainly, a variety of different ways to kind of at least run through some of that stuff and pull it out. So when we look at also across the board, US property tax by states, states are also looking at how to attract business investments when they maintain competitive property tax rates and avoid harmful taxes. However, when we look at these colors, we also have to think about transitions from real versus personal property and the inherent complexities. Comparatively, real property tax is a lot easier than business personal property tax, right? You don't have to file return forms for the real property. They already know it's there. the assessors already have those parcel numbers. It's public record. It's all very standard. Valuation has been in place for years and years. However, real property is where a lot of the money is going to come from. I mean, again, there's lots of businesses that don't have as much in the business personal property tax when you take the cost of the asset in certain jurisdictions as the real property, which can, of course, go into the millions of dollars for even one location. So when you're even being slightly overvalued on that much money, it can make a big difference in how much tax you're paying. So, the states that don't have business personal property tax, you still certainly want to keep an eye on being in line with the real property taxation, the values that they're giving you, again, post COVID, or, there's also a lot of other different factors that come into play with real estate valuations. Some are capped in certain states, some aren't. Again, knowing what you need to know to make sure that your real estate property is being valued correctly is certainly going to be a big tax savings if you can effectively argue that the value should be what is fair and not necessarily just some inflated value that you're not paying as much attention to. With a business personal property, 38 states assess business personal property. Wisconsin just dropped their requirements, which is hallelujah, because theirs wasn't always super easy to do because you had to do theirs online and key everything in, so nobody loved it. But these are the ones that are a little bit more complex in terms of the assets, the reporting requirements, getting your returns in on time, and then making sure all of those individual assets are correct, valued appropriately, cost appropriate, anything that's not taxable pulled out of it, exemptions, abatements, anything like that applied properly, knowing the rules of how those, different exemptions come into play, where you have Florida where, for different locations, if they're under a certain cost, they're exempt. You may still have to report them, but you shouldn't be paying tax on them. You don't know that, again, you might be rolling them up differently or doing different things that is eventually going to cost more money. So that's also something important in terms of how to break things out. But also, there are state assessments for centrally assessed properties as well. So that can add some in the states that don't normally assess business personal property. The state can assess property typically for companies like telecom, oil and gas, railroads, energy companies, things like that, where all of the assets in the state are going to be reported on one workbook or one spreadsheet. So the darker the color on this map, the worse the tax rates are on the property. So some states define what should be personal property as real property in some states. There's always a little bit of a waiver on things like leasehold improvements and building improvements and things like that. So rates and taxability are highly impacted. You also have to remember that the states that maybe look really great for property tax will often have other taxes that they impose to make up that revenue in different ways. So again, they're not usually doing anything to shoot themselves in the foot and lose money. So it might seem like it's an easy win in some of those states, and for property tax it may be, but those other taxes aren't always as visible. And then you have states that everyone's like, woohoo, they don't charge sales tax or they don't charge income tax or whatever it might be, but then their property tax rates are so much higher because again, they have to make up that revenue somewhere. We're not getting out of it in the end is I guess what we're trying to say. So Mimi, the next CPE question, please.
Perfect. Thank you. Okay, CPE question number 2. How automated are your current property tax compliance processes? A, extremely audited. B, moderately. C, somewhat. D, slightly. Or E, not at all. Give you all a moment to respond. Okay. Okay, great. Let's see. It looks like not at all is the most common response. So We'll talk a little bit more about automation in the coming slides. All right, back over to you, Melissa.
Not skip that. So when we talk about digital transformation and property tax compliance, I think this kind of just ties into the last question a little bit more, because when we think about how to automate, and automation can be anything from using macros in an Excel spreadsheet to using a property tax system, or again, analytics tools or things like that, that do a lot of the work for you. Because what we have to remember is compliance for property tax is still predominantly paper-based. There are very, very few states that have even remotely what we would call e-filing. And e-filing sounds great, but it's not automated either. You're still doing all the work to produce some sort of electronic file that you are then logging into a website or a system and uploading that file manually. This is not like sales tax. You know, a lot of you are Avalara customers. Your sales tax just magically, pulls out of your system and magically goes into the sales tax system. That is what we're going for. That is what our roadmap is for property tax. But jurisdictionally, they just make it very, very challenging to automate any of that from an electronic portal perspective. So lots of paper. They're mailing you returns. Sometimes they don't mail you return forms. You don't know which one to use. You have to go out to their website and dig through and try to figure it out. You're still receiving paper bills most of the time. You can sometimes log into their websites and get those electronic copies of your paper bills, and you can sometimes pay online, but again, you're logging into a system and you're clicking through and paying bill by bill. Same thing with the returns. You might be, printing and mailing. You might be emailing a PDF copy. It just, again, it all depends, but a lot of it is very just labor intensive work, particularly if there isn't any automation in place. Assessment notices, you receive those paper or you don't receive them, or you have to go to the website, or you just skip it because you don't care, even though maybe you should care. It just depends on your company. Audits and appeals, those are also typically paper-based. You typically have to submit something for the opportunity to appeal, and you have to do it really darn quick. In many states, you have somewhere between 2 weeks, 30 days to file an appeal from when you get that noticed value. Otherwise, you don't get to file an appeal. If you miss that deadline, you're stuck with the value, and no matter how crazy it is, honestly. And then doing everything on time, just managing all of those different deadlines. Sometimes the whole state has the same deadline. Sometimes they don't. Sometimes every single assessor is different. Sometimes every single collector is different. So it's really, really challenging to try to figure all of that out yourself. And then, sort of below the line, the things that you really want to be able to spend time on: planning and strategy for tax reductions, taxability analysis to see, is everything in line? What can we do to reduce this? How do we, make this faster for ourselves and our clients? Appraisal and valuation support. Sometimes you're going to need expert testimony or expert valuation resources. You're going to need to be able to get comps from somewhere, and whether you're paying from them from another company or you have someone in your organization to do that themselves depends on your organization. So all of those kinds of things is, just so much to manage. And again, with fewer and fewer resources managing just as much, if not more, that becomes really, really labor intensive. So when we talk about the labor, the staffing challenges are, as I mentioned, property tax expertise is dwindling. There are so many people that we've talked to, over the past few years that are getting closer to retirement age or retiring, that like nobody can believe is leaving the field. And as people are coming in, it takes time to build up that expertise. A lot of times, companies don't always send their people to conferences or send them to schools or whatever to really learn the most cutting edge. There's some great stuff through IPT. The Wichita Ad Valorem conference is a good one. As far as property tax, there's just a few really great groups that really have a lot of information and a lot of networking resources of what are the rest of you guys doing? How did somebody handle this? Has anybody ever filed an appeal here? That are really important to take advantage of. So that's always something to think about. And again, if you're looking for resources, you can get in contact with us at the end and we can certainly send you what we have. But the property tax expertise is critical because the less expertise somebody has, the more likely they are to unfortunately just make mistakes just because you don't know it. And you don't want to get into a brain trust situation, right? Where you have one person on your team that knows exactly how to do this filing, and then it's all in their head. And when they leave, or they go out on maternity or paternity leave, or they get sick or they get in an accident, nobody else knows what to do. That's not where you want to be left sitting. It's very stressful, and it's almost assured that you will be late and that you will pay penalties and you will make mistakes. The expectations, the tasks that people are going to be doing, things like data entry, printing things out, mailing things out physically, those are tasks that not everybody really thinks about wanting to do these days. It's not something that's appealing to everybody. We know that there's the opportunity for a lot more automation. I don't know how many of you have gone from, typing in your text to voice to text, and even though they're not perfect, you can still get a whole lot more texting done if you're just talking while you're in the car versus actually having to sit down and type. So it's the same thing with any type of data entry. People want to have a lot more automation. And again, road mapping what we can do to make a lot more of things automated and less manual entry then frees up your actual human resources, those people that have brains to do the analysis, to do the planning, to do the strategy, to really learn and take the higher level, parts of compliance instead of just sort of the mindless keying. Complexity. Every jurisdiction is different. There are resources to try to, amalgamate what each jurisdiction wants you to do or doesn't want you to do. But it's something that takes time to learn. It's something that takes time to pull through. Even again, as I said, just getting the forms, the depreciation factors, the addresses, the bills, the notices, those are all things that really are very labor intensive if somebody's trying to do them themselves versus using a system where those are already provided. And then turnover. When somebody leaves, how quickly can you get somebody new up and running, or can somebody existing take over that person's work in the gap time? If everything is, in just folders on their C drive, it's going to take forever. If it's all in their head, it's going to take forever. If there's piles of paper on their desk, it's going to take forever. But if something is centralized in a system where anybody can log in, see exactly what phase of the workflow the process ended, or where they're at, what they've done, what they haven't done, then that's going to make it a lot easier for anybody to step in and complete that business process. So those are all, again, things to consider when you're thinking about an investment in any type of automation. And it is an investment. There's going to be money spent, and it's really just a case of how much money are you spending on the system versus how much is it costing you not to have that. Dealing with penalties and appeals is a big piece for a lot of firms on behalf of their clients, because that's a lot of where everybody's bread and butter is showing that you can save them money and that the savings of that money is worth your cost. So those are things that are, things you need to be really up on. Without some intervention, managing appeals can be really challenging. Figuring out what's worth it to appeal can be really challenging. Sometimes things, might have a 20 or 30% discrepancy between your value and the assessor's value. But if the tax rate is like 0.002, you might save $10 and it's going to cost you hundreds or thousands of dollars to appeal. It's not worth it. So having something in place that, can show you the comparisons, the mapping, and how much of that, differential really makes sense, those are things that are going to make sure that you focus your time in the wisest ways to make the most impact for your clients. Some jurisdictions don't send assessment notices. Some appeal deadlines can be statutory, but other times it's a specific day after the notice of assessment is received. So you get something in the mail, which we all know the mail is taking a million times longer to get to us than it ever did before, because COVID ended, the post office's tracks with some of the faster carriers. So you think something's coming in, 3 days, now it's taking 10 days or 15 days, or, who knows. I've had clients say that they get their tax bills after the deadline, after the payment deadline. In some jurisdictions, it takes so long. So those, imagine getting a notice and saying, oh, you have, 30 days to appeal, but really you have 2 days because it took finally 28 days for it to get routed to you, for it to finally arrive and go through the mailroom, and somebody doesn't come in every day, so they didn't see it on their desk. Like, all of these things are happening. And then if you're going to, stand to save a lot of tax money to do this appeal, if you miss that opportunity, that's a really big missed opportunity to show that tax savings. Determining your values for appeal. So you have to look at trends, comparisons, prior year, comparable properties. A lot of times, if jurisdictions have things going on where they're, building something new, or they're providing more services or something, they're raising people's tax rates. They're raising, what the money that they need by overvaluing property, hoping people aren't going to catch it, hoping people aren't going to appeal. They have a budget too. They need to raise that money to provide those services. But, if you're really paying attention and you really think that that's not really fair and that's not really what you want to pay in tax, or, have your clients pay in tax, then, you're going to need to really push back on those. And then again, all of the deadlines, all of the extension dates, the due dates is a lot of research. It's a lot of paying attention. And if you miss one of those for one state, you could have hundreds of bills that are due in a given state that if you miss that deadline, all of them automatically incur a certain, 10% penalty, or start accruing interest right away, and or both. So again, that can cost a lot of money. I've heard of firms that, if you miss a deadline, it could be like, where you're eating like $200,000 of cost for your client, because that's their agreement with you, is that you're going to pay those bills on time on their behalf. So all of those kinds of things are important to consider, how you're managing it, what the best way to manage it is, and if you can manage it without a system in place. Data is everywhere. So you're getting stuff from the jurisdictions or the governments, the bills, the assessment notices, the return requirements, the return forms, all of that information. Mail systems versus doing things electronically. Again, where you can do things electronically versus using mailing. Those are some considerations to make. And then you get audited. And then there's, handouts. And then there's your ERP systems, your AP systems. How long does it take to cut checks? Are you doing manual keying or uploads? Are you pulling data from an ERP system and importing it? Are you pulling data from your ERP system and try to manage it in Excel, which obviously is going to take a lot longer? And is it right? I mean, I talk to many, many firms and clients who are like, I get this data, some of it's missing, some of it's wrong, some of the stuff has been disposed, but they still have it in the system. So you're just, sifting through all this, trying to figure out what the best way of reporting it is, what the best way of cleaning it up is. And, doing a lot of that data scrubbing is very time consuming. So having, again, a system that can kind of compare it to, what did you have last year? This was here last year, it's now here, or it's no longer here. Is that right? Those kinds of things can really help speed up that process. All right. So then talking a little bit about then technology and digital transformation. Accuracy is one of the best things about digital transformation. And again, it could be anything from your ERP system, your AP system. It could be that you have stuff in place, again, whether it's how you're doing things in Excel, whether you have a property tax management system, whether you're using other vendors for, jurisdiction correction, whether you're using, an analytic tool like Alteryx or Power BI or something like that. But technology can really be very helpful. One thing I would highly recommend, though, is I hear all the time, this is how we send our stuff to AP. It takes forever to format it, and this and that and that. It's because they've always sent that to AP, because 10 years ago, somebody set it up and sent it that way. And that's how they've trained everybody else ever since to do it. Nobody's ever talked to AP and said, does our system still require this? Is there an easier way to do this? Because a lot of times they've either changed our AP systems or an ERP system. There's functionality in those systems that didn't exist a year ago, 2 years ago, 5 years ago, but people don't always check their business processes to see, is there something better that we have in place? Is there a better way to doing this? So anytime something is like a giant pain and you really think that there should be a better way, there very well might be, and it might just take a conversation, or it might take some tenacity to go to the right people and figure out, is there something better that we could be doing that would put less strain on both of our teams? Because I've worked with companies who, the property tax team had to format their AP file, then they sent it to AP, and then AP keys it all in. They didn't know that their AP system could have an import. They could just import the file straight up. They could just dump it out of their property tax system and import it into AP, and nobody had to touch it, but nobody knew that until we asked. So again, asking those questions, and I'm not even going to say the hard questions, because those questions aren't even very hard. They're just not ones that people always think to ask. But even an existing system you've had forever still gets upgrades. It still has enhancements. So there might be functionality it didn't have when you bought it. And so that's really, really critical to, take advantage of. So the accuracy of data, when we talk about inaccurate data or forms, the more people touch things and key things, the more likely there is for a mistake to be made versus one person keys it, somebody else approves it, and then nobody touches it after that, and it just gets uploaded. That's ideal because that's less, fingers in the pot. Forms. Again, if you're going out to a website, you may or may not be picking the right form for your business, the right form for your types of assets, the right form for your clients. But if it's in a system, you can much more easily say, these are the forms that are available. They've all been certified and validated by the assessor that they're acceptable. And, oh, this one is for leasing, and this one is for manufacturing, and this one is for regular property tax. Well, let's pick this one for our regular clients, and this one for our manufacturing clients, and this one for our leasing clients. It just really takes all of that noise out of it. Also, missed due dates. Trying to figure out all of those due dates is really tough. So again, having a system that provides that is certainly something that's going to help you do things on time. Costs, your overpayments. If you're overpaying, if you're overvaluing, if you're putting things on your return forms that don't need to be taxed, you're overpaying, or your client is overpaying. And so that's where, again, stepping in and being able to trim those down is really going to show a lot of value. And then again, consistent penalties. People who pay late get penalized. People who file late get penalized. And, knowing whether you have to do it by, are they looking at the postmark date? Are they looking at the date it actually arrived? Are you doing it using a tracking system? Are you using a company like an AnyBill to mail things for you that you can track what's been done and that it's there on time? So, again, lots of different options for automation to make sure that you're doing things on time and correctly so that you're avoiding some of those extra costs. Sometimes just the volume is so overwhelming. You could have hundreds or thousands of bills, notices, return forms that you have to produce, and that can just be too much. So it could be that, nobody's just getting to all of it. It could be that there's you suddenly open something in a new jurisdiction, you're not aware that there's just going to be this influx of new documents and bills and things like that that are going to come through. And then all of a sudden it just tips the scales where you just really need to, again, think about how to streamline that a little bit better. And then we've talked about contesting or appealing values, that the process is involved. The process can be tough to do on time if you don't know that you need to do it on time, but it can provide a ton of tax savings. So going into some of our use cases, when we think about different companies, you could have a small company that has a huge footprint in the property tax world. And then you could have like a giant leasing company, but every asset is only being taxed at like a few dollars. You might get hundreds of tax bills, but they're all for like $5. So, it really depends on the different types of companies that you're working with. So again, thinking about which ones are going to be complex in which areas, and potentially having assistance with, what is going to be the focus with this type of company versus a different type of company can help you with your planning and your strategy for how to effectively help those companies. And then there's other ones that have industrial property where there's exemptions or abatements that are available versus retailers that, again, might have a lot of locations that everything needs to be done by location. So, just being familiar with some of that. So let's jump into our polling question.
Yep. Back for poll question number 3. What percent of your team's time is spent tracking appeals deadlines and working on appeals valuation? Is it more than 30%? Between 20 and 30% of the time? Between 10 and 20% of the time? Or less than 10% of the time? I'll give you a moment to respond. Okay, great. Looks like less than 10% of the time. That's our greatest answer. All right, back to you, Melissa.
Right. No, that's great. Then we know to jump a little bit over that with our tips. So our top tips are automating manual data entry. Again, we've talked about some of these things that you're just working with leaner teams and people that don't want to do data entry, and who could blame them? So being able to do things like scan, upload, and extract data without manually entering it is something that can be a game changer for certain people in their jobs. And it reduces user error. It keeps employees a lot happier. So again, thinking about that kind of automating that data entry piece can be very, very helpful. And again, there's a variety of ways to do that. Next one, quick turn assessment review. Figuring out a way, and again, automating with property tax systems is the easiest way, but there are other ways to do it. But making sure where you should be getting assessed, which ones did you get notices back from, and then having a formula in place quickly in those systems or somewhere else to identify, is this worth the appeal? So again, not a lot of you do appeals. Maybe some of you should be doing more appeals, but either way, you just need to establish which ones really are the outliers very quickly. And most systems can do that for you, but there's other analytics tools that can do that too. Using current forms. If you send the wrong form, they will send it back and they will tell you, oh, you're late now, and now you have a 10% penalty. So you want to use the right form for the right jurisdiction, right type of property, all of that kind of thing. Following the rules and requirements of each jurisdiction. Some of them still require a notarized signature. Some of them require that you sign your form in blue ink because they want to make sure somebody signed it. Some take electronic signatures. Some allow you to email PDFs to the assessors. Some allow you to upload CSV files up to their websites. It just depends on the county, the city. I'm never going to say the state because it's almost never the state unless you're state assessed. Every jurisdiction is different. And 99.9% of the time you're reporting to a county or a city assessor, and they all do things their own way in many, many states. Again, calculating your values right, reporting whether inventory or vehicles should be reportable, pulling out all of those non-taxable items is much, much easier when you use a property tax tool that is built for those specific purposes. Document your property valuation and comparables. So again, even if you're not reporting it on the form, you still want to have a value in place. And for real estate, you want to see what's comparable. You might have multiple properties within a jurisdiction, so you can see whether the properties are treated similarly. But if not, there are also tools to pull comps. You also have people out there that, certainly specialize in real estate appraisals and valuations and can help you with that. But you want to make sure that what you're being valued at is in line. But you also want to be able to say, hey, my property is comparable to these properties, and that's why I am arguing with you about this valuation, and I want you to reduce it. So keeping track of it for yourselves, but also using, firms or software vendors that can help with that. And then again, if you do decide to do any appeals, having that documentation available and having that quick analysis of, is this worth the fight, is going to really help you assess. Sometimes it's just pushing back and it's saying, hey, I want you to reduce this to this and here's why. And sometimes the assessors are like, okay, fine, you're right. If you didn't catch this or you didn't catch it in time, we would gladly take the extra tax money, but since you did, we'll go ahead and give it to you because you're right. So sometimes it does just take a little pushback. Other times it's a lot of litigation and it may or may not be worth it. Automate your due date tracking workflows. If you've ever had to pay penalties and interest on bills or returns that were not filed timely, that can cost a lot of money. And again, if you're doing it on behalf of a client, it's embarrassing to have to say, we paid these late, because usually they find out before you do. So that's definitely not something you want to have happen. So keeping track of all those and making sure that those are done correctly and that you're not missing anything, nothing slipped, is some ways that you can really trim down any of those extra costs that you have. If you don't have those costs, it's an easier way of automating that process so that, again, you're not having your resources waste their time, digging through for that data and scrambling to make sure things are getting done on time, or paying extra costs in mailing or things like that. So again, software can help with that, and there are discounts sometimes available for jurisdictions if you pay early. So if that works with your cash flow, then that certainly can save you money, which is another way of, again, providing that value for your clients. Reviewing valuation factors. So tax rates typically are about 1% of the taxable value, about. I mean, obviously some vary significantly, but a lot are kind of in line with that. So the lower your value is, the lower your tax is going to be. So again, taking advantage of those jurisdictions that have exemptions and abatements, not over reporting non-taxable items, bundling assets. This is a big mistake that a lot of people make. It is so tempting to be like, oh, I have 500 shopping carts at this location. I'm going to have one line of assets with that total cost for 500 carts. But when you unbundle them, each individual cart is below the threshold of what you have to report. So you can take that giant cost right off of your return because you unbundled it. One asset that's worth, $50,000 versus 500 assets that are worth $60, that can be below a state or jurisdiction's threshold of what you have to report. So do you see how those kinds of little things can save you guys a lot of money or help your clients save a lot of money? And then extracting sales tax if you don't have to report it, or other types of cost reductions, are definitely things that you can do to also save money in some of those states. Integrating as best you can with your ERP or fixed asset system. So as I mentioned, review what you have, see what the capabilities and functionalities are. Are there better ways to automate what you're getting? And again, if your clients are providing you data that is tough to work with, but it doesn't change very much, property tax systems can typically roll over the existing data. So then you just only have to ask them for additions, disposals, and transfers, instead of the whole messy fixed asset system that you already did all the work last year to extract everything that you didn't want to pay tax on for them. So, again, taking advantage of those property tax systems and their functionality instead of getting a whole big data dump and then having to clean it all up again is, something that can save you time and also save money. Process reviews, I cannot stress this enough, that it's very important to review your existing processes and ask why are we doing it this way? Is this the best way to do it? This almost always happens when there's like a manager change or some other type of big company investment, but it should happen more frequently. If you have a team that's been in place for a while, it's easy just to get into that cadence of doing things the way you've always done them, but there is often a better, cheaper, faster, easier, more fun way to do them, to take advantage of what you already have, let alone bring in anything new. So our last polling question, I think.
Yep, last one. What is the hardest part of managing property tax compliance at your company? Here are the options. Data entry, avoiding overpayment, investigating potential tax savings, making sure that you are using the correct forms, documenting property valuation and comparables, tracking due dates, or reviewing valuation factors. I'll give you all a couple moments to respond. Okay. I'll just give you another moment there. All right. Let's see these answers. It looks like documenting property valuation comparables and investigating potential tax savings are pretty difficult, but so is data entry, unsurprisingly. All right, I'll pass it back over to you, Melissa.
Thank you. So again, we're just going to touch on this, and I am totally transparent. There are a few property tax systems depending on what your company, what your company does. There's different features that you might want to look for. But for Avalara property tax, which obviously I love, the areas for optimization, just exactly literally what you guys just said. Property valuation optimization, data management, so reducing that data entry, working with your company and jurisdiction data management, and then tax liability. Again, reducing that actual tax that you're getting for your clients or paying on your own behalf. Technology is required in terms of managing real and personal property in one central web-based secured hub. Anybody can log in at any time. Anybody can see where in the process something is. You can see right on the dashboard, this is what's outstanding. This is what we still have to do. These are bills that are due this week that we didn't get these 5. We probably need to, go to the jurisdiction website or contact them to make sure we're not paying late. It's all laid out right there for you on the front screen. Automating data extraction, so scanning and uploading those documents and then being like, see you tomorrow. And all of that data is getting extracted and pushed into your system automatically. So anyone who doesn't want to key tax bills and notice values anymore, this is a great option for you to take advantage of. Managing your liability through reporting. Again, being able to do those quick comparisons, those thresholds, and just show immediately, these are the things you should be looking at for appeal. These are the things that have fallen out of your, opinion of value versus the notice value. And being able to just look at those, pass everything else through, and focus just on the ones that actually need your work instead of having to review everything. And then you have the assessment and appeal visibility there. All of the returns being provided for you, all of the deadlines being provided for you, all of the depreciation and index factors being provided for you, all of the assessor and collector information being provided for you, not having to research any of that. All of that will be, again, a big time saver and help your accuracy significantly. And then again, creating an audit trail with document storage, all of those documents right there that have been uploaded at your fingertips in your system that anyone can access anywhere from the web, anytime, anywhere, no limit to users. If you need to log into the client system, you can. Anybody can work on anything. If you have turnover, job changes, staffing changes at all, somebody can jump in very easily. And then you have our team support. So if somebody jumps in and is like, what does this mean? You can always contact us and we can help you with that. And then again, being able to link all of that automatically without entering the data yourself is going to be invaluable, I think. So those are some ideas about what you could be doing with the property tax system. We have a lot of these integrations on our roadmap. We have APIs already, but also more API data on our roadmap that you'll just be able to automatically upload different things. We have APIs that automatically link to any bill, so you wouldn't even have to do anything to get your returns mailed out or your bills paid by them. Just lots of automation possibilities that we're happy to talk through with you. So I know we just have a few more minutes, but we do have a little bit of time for Q&A if you want to talk Q&A.
Perfect. Yep. So I've got a question for you here, Melissa. Simon asked, I noticed you refer to invoices received for associated costs. We had our landlord pay for a leasehold improvements, which we show as an asset in our books. Is this subject to property tax?
I'm going to say it depends, because it depends what jurisdiction. It depends on the type of property. It depends. And unfortunately, we can certainly research that if you want to send us an email or something like that, Simon, or anybody who has those specific questions, because I don't want to provide you with wrong information. even though I'm not liable for it, it's still not something I would want to do. But there's a lot of things that are, it depends, unfortunately, in property tax, because it depends on the jurisdiction, it depends on the industry, and then it depends on really what the property type is and the reporting requirements for that exact item. There's lots of states where leasehold improvements aren't even reportable, and then other ones that they are as personal property, and other ones they are as real property. So,
got it. One other question is just a refresher. At the beginning of the presentation, you were describing a change that recently happened in Wisconsin to their property tax. What was that again?
Wisconsin is no longer requiring property tax filings. They're still requiring that if you had bills and stuff that you had to pay for last year, it's still required. And we have a link somewhere I can send you that you can send out to everybody, or again, you guys can contact me, but I have the link to the article. But it is a change that Wisconsin used to have personal property filing requirements. They do not have them anymore. So that's going to be something that's different for this year. And again, that was on, you had to log into their website and like key everything in, which is why everybody's like hallelujahing that they don't have it anymore, because it was pretty cumbersome.
Right, right. Okay, one more question. We're going to go 5 minutes over, everyone. So if you're all right with that, we'll just get one more question in, and then I'll do just one more moment of housekeeping after that. So last but not least, does Avalara have guidance if vehicles used for rentals are creating nexus in various jurisdictions? Are those subject to property tax?
So nexus is different with property tax than it is with sales tax. We don't really have nexus. If your vehicle is physically in a jurisdiction that requires you to report vehicles, and that vehicle is there on the lien date of that state, then you have to report it. If none of those conditions applies, it's not there on the lien date that year, it doesn't require reporting vehicles, then you don't have to report it. So again, I'm going to come back to my trustee, it depends, but it's a great question.
It is.
And exactly why property tax is so dang complicated. And yes, we always have help for that, because we can tell you where, where it's reportable, what the lien date is. That's all in our property tax system. So it makes it a lot easier, but we're certainly happy to help with questions too.
Great. Okay, well, that's all the time we have for questions today. Just one last housekeeping slide from me. If you qualified for CPE credit today, you can download your certificate now in the CPE certificate engagement tool. It should be on your console. Your certificate will also be available in a post-event email that you'll receive in the next 24 hours. Also, in that post-event email, we'll include a link back to this console to view the on-demand recording, slide deck, and the additional resources. Thank you all for attending today's webinar. Thank you, Melissa, for a fantastic presentation, and we hope to see you all again very soon.
Thanks, everybody. Appreciate your time, and I'd love to answer more of those questions, so definitely send them in.
Talk soon, everyone. Bye-bye.